Well, joining me now to cast his eye over those headlines is Peter Andersen, founder and portfolio manager at Andersen Capital Management. Peter, welcome to Trading at Noon. Let's start with the data and inflation picture. Is the backdrop so benign now that the Fed has no other option but to pause?
I think so. The Fed has done a remarkable job in the face of pandemics, job, confusion as to the employment numbers. And it looks like we are going to get the fabled soft landing. So I'm expecting no news out of this meeting this week, and perhaps even no more hikes through the rest of this year.
Well, that was my next question. What do you expect ahead? What do you expect Jerome Powell to say in his commentary tomorrow?
Mr. Powell has put himself in a very, very tough position because he has been repeatedly mentioning the 2% inflation rate. It almost seems like it's an impossible task these days to get inflation down to 2%, but he has no option to back off now. So I'm not certain he will ever see that 2%. Maybe 3% will be reasonable to settle with. So he's going to be very careful, as he always is in these narratives. In the press conference, he loosens up just a bit, but still sticks to the script. So I'm not expecting to hear anything surprising. I think reporters might ask him, if they dare, whether or not he would ever lower interest rates. That's sneaking into the narrative now, which I think is way premature. So I'm not expecting too much revealing dialogue, but just more of the same from the last meeting, frankly.
The other big running theme at the moment, Peter, has been the IPO market. We've got Instacart today, but at possibly a much lower valuation than hoped for just a couple of years ago. We had Arm last week. There was a surge of interest there, although its shares have come off since. What's your take on what's going on?
The IPO market, I professionally stay away from the IPO market because I always think that the IPO prices are inflated. There is a lot of, dare I say, hype with the IPO prices. They're usually priced to take off. Investment bankers love to mention that it's oversubscribed 5 times, 6 times. So I'm not really reading too much into the ARM IPO. And as you said, the price did decrease somewhat very, very soon after its IPO debut. So to project that these two IPOs are signaling to us that the market might be a little bit more welcoming, I think it is premature. So we will have to see how this comes out today. But even if it does so-called pop in price, I'm still not convinced that the market is rolling out the welcome wagon, so to speak, for future IPOs.
And finally, Peter, the car workers' strike looks in danger of gaining momentum. What danger could that pose to the US economy?
It depends on how contained it remains. So as you mentioned, it's rather contained now. However, if it does become wider in its impact, then that will throw another element into the Fed and how the Fed is trying to project where the economy is going. So I'm certain Mr. Powell is hoping that that strike will end and be resolved favorably, because it's just another variable that is so hard to predict. But certainly markets never like strikes like that. And if it were contained and resolved, it would be a trivial matter. But time will tell as this plays out as to whether or not it will impact the market on a longer term.
Okay, Peter, it's been great to hear your thoughts. Peter Andersen, founder and portfolio manager at Andersen Capital Management. Many thanks for being with us today.